In this video, we are going to talk about a company called DCX Systems. So by investing in such companies, you will be able to play multiple themes in the sunrise sectors. So this company does business in defense, aerospace, railways, as well as the EMS industry. So all of us know quite well that all these industries are the focus area of the government right now. There are massive orders being released by the government. They are encouraging private players to start their own manufacturing activities in these by giving them subsidies and various incentives. So companies like this will benefit due to this tailwinds in the next 5 to 10 years. So I'll keep this video very crisp, highlighting only the important points which you should know as investors and share my view on the stock. If you're new to the channel, please do subscribe and hit the bell icon so that you get notifications of all the new videos which I upload. And if you're not a part of a Telegram channel, do join today by clicking the link in the description so that you join the correct Telegram channel. Every day morning before the market opens, I share my views on the market, which will help you manage your portfolios much better than today. So let's talk about DCX Systems. This will be the flow of our discussion. We'll talk about the business model in brief. We'll look at the chart, the stock performance in the last couple of years. We'll talk about the main financial parameters. We'll see the reasons for the rise in the stock price recently. We'll talk about the outlook of the management going forward. We'll look at the valuations at present, we'll understand the risks of investing in this business and then form an overall view after this discussion. So DCX Systems is a preferred offset provider to a large defense company in Israel. So majority of the revenue of this company comes from that Israeli company. And to de-risk this business, the company is venturing into newer products in newer geographies right now. So this company was started in 2011-12 and it has end-to-end solutions right from the product design till delivery and in fact the operations and maintenance also, or the MRO activities. One good thing about this company is it has an asset-light model wherein the OEMs provide the equipment for testing the products manufactured to this company. So this is the broad bifurcation of the different business segments. They have three business segments broadly: manufacturing, system integration, and the others upcoming business segments. So in manufacturing, they make cable wire harnesses. So this is a business which the company says is having higher margins when compared to the other verticals. So as the company focuses more on this business, their margins will expand going forward. Then in EMS, which is electronics manufacturing service, they have a subsidiary called Renal Advanced Systems through which they run this business. So this is like a backward integration for this company. So in the system integration is the defense business which comes under this. In this, they have broadly two bifurcations of IOP and non-IOP led businesses. And there are some upcoming business verticals which are related to knitting of electronic parts and the maintenance, repair and operations business. So in their main business vertical, which is coming from the Israeli defense company, what do? They manufacture electronic assemblies, automatic missile detection radars, unmanned aerial vehicle systems. So these are something like drones, not exactly drones, but a upgraded version of that used in the defense, then the barrack systems and other products. So by these product range, you can understand that these are not very basic items. These are advanced technological products which are manufactured for the company. Now, as we have discussed, the backward integration is done through their subsidiary Renal Advanced Systems, and in terms of the size of manufacturing capacities, they have about 30,000 square feet in their parent company, which is located in Bangalore, and the EMS, which is the subsidiary, has about 40,000 SFT. They have recently done a technology transfer joint venture through their wholly owned subsidiary called DCX Systems Limited. In this, they are focusing on the railway sector, trying to develop the obstacle detection system, which is similar to Kavach. And you know quite well that this also has a huge size of opportunity. Now, these are the well-renowned customers of this company, so which shows the capabilities of this company and the trust which the customers place on them. Now, when you look at the stock performance post the listing of around 300 rupees, the stock fell down to almost near 150 and consolidated for a while. And from there onwards, it gave a sharp rise towards 300 to 350 range. And post consolidation, due to the recent order wins by the company, it has given another jump towards 450 rupees. So from the IPO price of about 200, it is nearly 2x, and from the bottom which the company made, it is about to become 3x in a very short period of time. When you look at the main financial highlights, the revenue are steadily rising. It has risen from about 450 crores in FY20 to almost 1400 crores in FY24, which is more than 3x. If you look at the EBITDA, margins have expanded. Earlier, they did about 6 to 10 crores during the COVID times, which increased to about 70 to 80 crores now. Now, when you look at the margins, they have expanded from about 1-2% in EBITDA level to about 7%, which has slightly dropped down to 5% in FY24. The company wants to focus on the wire harness business, which will lead to further expansion of these margins. Recently, the company did a QIP of about 500 crores, which led to dilution in the promoter holding to about 62%. The return ratios are not very impressive. They are about 9%, and the company has very high debtors of about 667 crores, leading to the debtor days of about 171 days. So this could be some area which you should watch keenly as investors, because ultimately order execution is not important. The money flow into the company is very important. The profits include other income element of 46 crores, which we should closely monitor going forward, whether this is a recurring income or not. Right now, the company has paid a tax rate of about 20% in FY24. Going forward, when this normalizes, this could squeeze in the profitability a bit. They have more than 800 crore cash on the balance sheet because of the recent fundraising. And in terms of cash flows, the operating cash flows themselves are negative. So I'm concerned that for this company to scale going forward, unless the cash flows are positive, they have to either raise debt or they have to do further raising of funds through equity, which will further dilute the promoter holding. What led to the rise in the sharp price from the bottom of about 150 rupees? The sales went on increasing, the margins expanded, leading to multiple times growth in profit. All these sectors which I talked about, EMS, defense, aerospace, railways, all these are the favorite sectors of the market, which led to the increase in the PE multiple. The company is trying to de-risk their business in terms of customer, in terms of geographies, and they always try to innovate new products. Now, what is the growth outlook which the management is giving going forward? They want to continue their focus on backward integration and the EMS space. They want to enter new geographies across the globe. They have started getting good orders from US. They want to focus on business other than the Israeli business so that their risk gets diversified, and focus on their wire harness business will increase their top line as well as the margins. So they are venturing into the railway obstacle detection systems, which will soon be fully ready. And as on March 31st, 2024, they have an order book of about 800 crores, and recently they have got an order from L&T of about 1250 crores, which is to be executed in 3 years, which has further added to this number. The company is also open to inorganic growth. So the recent fundraising and 800 crores of cash on the balance sheet may be an indication of an acquisition on the cards. Now, when you talk about the valuations, earlier the company was getting a multiple of about 30 to 40 times, because there are certain risks in the business model in terms of dependency and poor return ratios and cash flows, which we have discussed. But due to the recent order wins, the markets have understood that the company is going in the right direction, de-risking their business, and hence the valuation multiples have increased. And right now it is trading at somewhere around 70 times the earnings and about 4 times the price to book value, which appear to be slightly stretched in terms of valuation. Now, what are the risks in this business? The main revenue is coming from the Israeli entity even right now, so that there is a risk of customer concentration as well as concentration in terms of geography, because if anything goes wrong in that country, we can get impacted. Then the cash flows are not at all impressive, so sustainable long-term growth is not possible without getting free cash flows. The promoters' dilution of the holdings may be a concern if they go for further fundraising in the future, and the margins have to be consistently maintained, because in FY24 we again saw a dip towards 5%. So now that you have understood the business model of the company, the stock price movement, the financial highlights, the growth plans, the risks involved, and the valuations, now what is the view on the stock? If you're holding the stock already from the lower levels, you should keep holding to it, as the growth is still intact. The company is moving into the right direction in terms of diversifying into new businesses and entering niche high margin businesses. If you're looking at a fresh entry, after the recent rise, the valuations are slightly pricey, so you should wait for some correction or accumulate it very slowly over a long period of time. As in the sectors in which the company operates, there are tailwinds and the future looks bright for the company. Another big risk you should keep in mind is the regulatory risk in all these sectors, because if there is a change in the government policy, that could impact all the businesses of these sectors drastically. So that's about DCX Systems. I hope you like the very crisp analysis. I have tried to cover all the important points in just about 8 to 10 minutes. If you like it, hit the like button and subscribe to the channel. Do share it with your friends on WhatsApp. If you want me to make videos on your favorite stocks, don't forget to mention in the comment section this name also we have picked up from the last video. Do join our Telegram channel by clicking the link in the description button to stay in touch with me on a daily basis. Thank you for watching and have a wonderful day.